Hi, thank you for watching us here at Tax Talk UK. Today we're going to answer the question, which self-assessment tax return do I need to complete? Before I talk about that, if I could please ask you to take a few seconds to subscribe to our YouTube channel. That way you'll easily be able to refer back to this information if you need to, as well as finding information that we have on a whole range of other topics that will help you in your self-employment or running your small business. If you want to be notified as soon as we upload new content, then you should also turn on the notifications. So, as I mentioned, we've been asked which self-assessment tax return do I need to complete? So if you have watched our guidance on trading style and how you should decide how to trade, whether you trade as a sole trader or as a limited company, the trading style that you've chosen in effect will determine the self-assessment tax returns that you need to submit. So self-assessment is exactly what it says. It is you assessing your own tax and declaring that to HMRC on a self-assessment tax return. Now, that doesn't mean that you can just make up the rules on what you claim as allowable expenses. You must follow the HMRC very stringent guidance on what is allowable and what should be included when you're self-assessing your profit. So just to clarify that. So if you have decided that you're going to trade as a sole trader, then quite simply, at the end of the tax return, you will need to submit a self-assessment, a personal tax return for the tax year within 9 months of the end of the tax return, roughly. So the tax year ends on the 5th of April. The first date that you could submit your tax return is on the 6th of April, and you have until the 31st of January of the following year. And as well as the deadline for submission, that is also the deadline for paying your liabilities. So always top tip, get your tax return submitted or at least completed as early as possible in the tax year, so you have plenty of time to know what your liability will be. If you have decided that you're trading with somebody else, but you're going to be unincorporated and you've decided to register an unincorporated partnership, so then the partnership will also need to make a partnership return to HMRC. And on that declaration, it will split the profit or the loss exactly in the same proportion as it's set up. So if you have a 50-50 partnership set up from the start, then when you do your tax returns on the partnership return, you'll be declaring all the details of how your profit has been calculated, and then you'll be saying, okay, and then this is split 50-50 between the two partners. And then no tax liability is actually paid by the partnership in this unincorporated scenario. Each of the individual partners will then need to submit a personal self-assessment tax return, and they will need to complete the partnership section and declare on their percentage of the profit or loss, exactly as was disclosed or declared, on the partnership return. So that is for unincorporated. And just for clarity, if you are a sole trader and you're submitting a personal tax return, you will need to complete the self-employed section. And depending on your level of trading, you may be able to just submit what we call the short form, which doesn't require so much detail. So that's great if it's quite simple what you're doing. So that is for unincorporated sole traders and partnerships. Now, if you are trading as a limited company and you've incorporated, then you will remember from our guidance on this that means that you have in effect incorporated a separate entity from the business owner and the person running the running the business. So the actual company itself will need to submit a company tax return that declares their profits for corporation tax, and they will also need to submit those accounts in some form to Companies House. Then if the shareholders have received any dividends above the exemption allowance, they will also then need, as individuals, to submit a self-assessment personal tax return declaring their dividends in the main body of that return. There's no extra supplementary page for it, it's in the main body. And then if the director of the company has received a salary through the payroll through real time, then they will not necessarily need to submit a personal tax return if this is their only source of income, because that income will have been taxed at source. But say, for example, if the director has other things to declare, perhaps they have benefits in kind, or they have a combination of salary and dividends, or they might have other income outside of the limited company, then they would need to do a self-assessment personal tax return. So hopefully this will help you to understand, depending on the trading style that you have chosen, will determine which self-assessment tax return or tax returns you will need to do. Bearing in mind, if you're a partnership, for example, you need to do the partnership and the individual. If you're a limited company, the limited company will need to do a tax return, and potentially you may need to do a personal one, not always. But as we always mention, if you're not able to kind of get your head around this and you're a little bit confused, then we would strongly advise that you engage the services of a professional that can help you with this. And as always, if you are engaging the services of a professional, please do check that they are qualified in the area that they are helping you with, that they have insurance, and that they are a member of a professional body. So hopefully this will help you, and do remember to always be mindful of the deadlines for returns. There can be lots of deadlines to remember, so you generally have quite a long lead time to be able to submit the returns after the end of the period. So remember to try and do them as promptly as possible, so you have the maximum amount of time to know, and to, if you haven't been able to track it throughout the trading period, that you know what the tax liability is going to be. So as I mentioned earlier, please do take a moment to subscribe to our YouTube channel, and we wish you lots of luck, and thank you again for watching. Take care, goodbye.